get a move on then. And meantime, put the spotlight on Utkarsh Small Finance Bank. It's been a steady quarter for the company. The net interest margins as well are poised to grow. So let's understand those growth targets. Govind Singh is the Managing Director and CEO of Utkarsh Small Finance Bank joining us. Good to have you on board. Let's talk about your interest income because that has been pretty high on a year-on-year basis. And as a result, your NII growth has been strong. So will we see this continuing into the coming quarters?
Yeah, good morning and thank you for having me here. So yes, certainly, this is the impact of last year's, the type of growth we have seen during last financial year. It's a, impact of that. The balance sheet has grown by around 30% during last financial year. I'm talking about AUM. So it is the impact of that. And we see that it will continue for, in medium run. The way we had guided earlier also, we expect this growth to be around 30% for this year also. So the similar type of growth you'll see going forward also.
Last time when we spoke to you, mentioned your NIMs would be at 9% plus for next 2 or 3 years. Does it still hold true considering that there is a cost of pressure of liability?
Well, yes, I mean, the cost of fund has remained almost static, and we do expect now, it will start coming down. Obviously, it may take some time. It will start coming down. So our guidance of 9% plus NIM in medium run, you can say from next 2 to 3 years time, stays good, and it will we hold that that guidance today also.
Right. For the last 4 quarters, though, we saw advances growth above 30% on a year-on-year basis. Do you think the same kind of trend can continue for the rest of the fiscal as well? And also deposit growth, on the other hand, that stayed at around 25% and CD ratio at 93%. So do you think deposit growth will be a constraint for your advances growth, given that RBI is also now being a little cautious about this?
So one is that in terms of advances growth of around 30% odd for this year, that's on track. And if we see our quarter one, obviously quarter one is normally slow for most of the players. So it has been better than the last year, overall from the perspective. And we do expect that we'll be crossing 30% as far as our growth for AUM is concerned, growth for advances is concerned. Deposit growth is expected to be higher than advances growth this year. In fact, last year we had 27% growth. In fact, if you see our retail term deposit growth, that is almost 45% plus throughout this period. And our major focus has been on the SA part and the retail term deposit part, and there has been good growth on that part. In fact, we would have grown even higher than this, but we have a very high amount of surplus liquidity right now. You must have seen that people are facing challenge in terms of liquidity, but we are having surplus liquidity. And in fact, our plans are to bring down this liquidity in quarter ahead, in quarter 2 and quarter 3. So overall deposit front or the liquidity front, we don't have any challenge at all. And we are getting good traction as far as the overall retail deposits are concerned, and that will continue to be there. Our expectation is that deposit growth will be around 3 to 5% higher than the advances growth. So we can expect deposit growth for this financial year in the range of 33 to 35% against advances growth of 30%. So that we are able to have a better CD ratios going forward, a decline in overall CD ratio going forward. That is what we expect. So I think overall, in terms of balance sheet, in terms of business growth for this financial year, we expect that whatever guidance we had given at the end of March 24 results, that stays, and those remain well in control.
And you've also managed to maintain your NPA levels at remarkably low levels. Now that a few banks are applying for the universal banking, what are your plans? Have you had any internal conversations, any factors that you need to change in order to become eligible?
So technically, we as on date, we are eligible for all the you can say tick boxes of Reserve Bank of India. And our idea is, you are aware that we are in the process of getting our reverse merger process completed. That will take still a year or so. That's the expected timelines. So our idea is that once we are able to complete that process, we will we'll discuss and debate and think about that whether we should go for universal banking license to the Reserve Bank of India at that time. Overall, on a medium-term trajectory, certainly, bank would like to move from small finance bank to universal bank. Having said so, as a small finance bank, we don't have any limitation in terms of any part of business, and we have been able to do well as a small finance bank, and will continue to chart through that trajectory.
All right. And what about your credit costs having inched up a little bit? Is that due to the seasonality factor, or are you seeing the stress building up in any areas of your accounts, given that banks have already been talking about stress in the MSME, the retail unsecured lending?
So I'll break into two parts. One is that yes, in quarter 1, and so far we had some, one, the heat wave in the northern India had some impact because of mobility of people, as I mean from the client side as well as from the employee side becomes a little difficult. So that was quite severe in north this time. So that had little impact. Second, during the election period, because especially places like Uttar Pradesh, Bihar, and that area, in many of the places it was 7 stage elections. So that had some operational impact, when in the movement of people, in the movement of client, there are many holidays during that period. So that has some impact on our overall credit cost. That has gone little up. But as I mentioned, that we know our earlier guidance of around 2% for the financial year remains there, and we'll see us, gradual improvement from here, and especially in the quarter 3 and quarter 4, we do expect that this will come down significantly. And as far as the ground part is concerned, because we are working in some of the toughest terrain, and we have not seen any stress buildup or any challenge in terms of financial or economic environment as per either rural India or in the semi-urban India. So we don't foresee any challenge on that count.
Okay, Mr. Singh, great to have you on the show. Thank you so much for highlighting how the quarter went by was, what's there to look forward to. Thank you so much.